Hello all, this is Marvin from StockMarketPlan.com with your stock market watch for March 15th, 2011. Okay, we woke up this morning and to news alert of the Nikkei overseas in Japan tanking. Before you knew it, we were in the futures down 200 some odd points. It's really tough day in the markets. Pretty much I believe 29 of the 30 Dow stocks were down today on heavy volume. Evident right here, looking at the S&P 500, volume came in very strong. Looking at the spiders here, SPY. And if we look at the Dow, also heavy volume came in into the Diamonds Trust, the Dow Jones, symbol DIA. Again, closing underneath the 50-day moving average. And again, looking at the Nasdaq Trust, symbol QQQQ. Again, heavy volume, down day. Now I'm back looking at the S&P 500 through the spiders, and today is a tough day to judge. Whenever you have a miraculous event like this in the markets, everything gets sort of cloudy. What I mean by that, you get a lot of noise. You start hearing a lot of reasoning of why the market did what it did today, and then some people, trying to pick a bottom here and say, this is a great time to invest in stocks at a lower level in price. It's, in other words, it's basically, touting that this is a gift. And it's always been part of Wall Street. Whenever something like this happens, it's let's go ahead and buy some more shares at a lower price. And I'm not saying the market goes up tomorrow, or goes down. I'm just saying that be careful. Be careful with that rhetoric, because stocks were pretty cheap here, but they are a lot cheaper right now. So with that said, you can always go lower, and especially when there's no support out here. Now, the one thing that the market does have on its side is that the market worked up today, to close to a higher close. And let me show you what that looks like. Here's the intraday chart of the spiders, and we had a gap down and worked ourselves into the close to a higher close. Although we're still down for the day, we still battled through the day and came back to our higher close. Another thing that I'm noticing is, back to our daily chart here. Another thing that I'm noticing is leading stocks, the Netflixes, the Amazons, the Chipotle Mexican Grills. I mean, the stocks that have taken this market to the level that it is at. Netflix, I believe, got an upgrade today, and the stock was up huge on a day like this. It's a story to pay attention to. I think in order for this market to turn even more bearish, a lot of these leading names, eventually they have to become overtaken by this party, this correction party. You usually don't see leading stocks motor higher as a market enters a bear market. So that's a positive. I think that's one of the last legs. I'm looking for those stocks, leading stocks, watching them closely, because they are leading stocks, and they do tell a lot as far as where the market is headed. So they're right now bucking the trend. Basically, a lot of them are building bases. Some of them are breaking to higher ground. So it's again, growth stories that are totally bucking the trend. And for us to have a real bear market of any consequence, enduring consequence, these issues, they have to start behaving like we're in a correction. So I'll be looking for that. Tomorrow we have a slew of numbers coming out of Wall Street. I believe PPI and housing and a couple of other announcements that could affect the market. But right now, this market is so driven by what is going on in Japan, and man, my heart goes out to those people every time I watch those images. It's something else. And I think the markets are going to be overtaken by what's going on over there. Eventually, this being a global economy now, I think the market, today was a pure example. I mean, everything's interconnected. I mean, stocks like Toyota Motor have been just disseminated the last 4 or 5 sessions. Other companies, bigger companies that are American companies that have a lot of a big consumer base over in Japan, they were hit hard. So I mean, we're selling goods, just about anywhere in the world, and definitely in Japan. So, this is definitely it's gonna take time to sort out. I do see people out there in the profession trying to get ahead of this, and this is how we're gonna make money in an environment like this or that. And it's, again, that's kind of playing that guessing game. Who knows where we're gonna be, a year, where Japan is gonna be a year or 2 years from now. I think it's just way too early to tell. There's not enough facts out there for us to really make an assessment of where to go with money if we want to do in some way or somehow capitalize on this tragedy. But it's I just rather just like to see these people get back on their feet and then go from there. Be careful of be real careful of just catching a fallen knife. Really, I mean, right now there's this is like a war, and there's bullets flying everywhere, bulls and bears tugging against each other, and this smoke is eventually going to clear. The bullets will stop ringing, and the smoke will clear, and then we'll get a clearer picture of where this market is headed right now. This is not clear. When you do this around the 50-day, that's a battle. And then you come down here, now we've got to work. I mean, I was talking about this line that I drew for you guys a long time ago, back on these 2 days. There's a line I drew for you guys a while ago, back in February, late February, when we had these 2 days is all I had to work with. And as we saw the market come through, this is what it did, and pretty much we called it to a T, that it would get squeezed right here between the 50-day and this trend line, and now buckle down lower. Again, this was not expected. The thing is about markets, everything is priced in. Everything that is going on right now is being priced into the marketplace on a daily basis, and usually the market, it is said to be way ahead of what actually happens in the economy by a good 6 to 8 months. So there is definitely a battle here. There is definitely a questioning of this bull run that we've been on. Is it exhausted? And we haven't had a period like this in a while, so there is some merit to the move here of moving sideways and consolidating. And again, I explained that was totally normal, totally healthy, and at the same time it's like a testing ground. Okay, we've reached this plateau, now let's see how we behave up here. And unfortunately, this, looking in hindsight now and looking back in the previous 15 or 16 sessions, it's a believable story, although this is basically caused by a tragedy here. It's just amazing to me how everything just happens here. And looking back, the higher volume days, okay, low volume bounces, I mean, that's just bearish, and the market cannot take much of that. And now coupled with this tragedy over in Japan, the market, I guess what I'm trying to say is the market, it's going to have it has a lot of work to do now, and to be going out there and picking bottoms on this market, just good luck with that. It's just not my cup of tea. That's like rolling dice, and I don't like rolling dice in the market. I like to have a, this is an uptrend. Okay, that's a clear uptrend. That is a place where it's basing, it's uptrend, high volume up days, okay, and we're off to the races, and that's a place where I can see myself buying stock. But when we get into something like this, where the volume just picks up on the down days, and it's just a place where the market's being tested right now, and that is it. And let's see if it passed the test. That's what I'm thinking. That's the way I'm thinking right now. Still reduced my position by 25% in my long-term retirement account. So I'm sitting 25% cash, 75% equities, and just seeing how this plays out. I mean, if this thing bounces up here on dismal volume, again, the same holds true that I've said, from way back here since I've been on the tube with you guys, is I'm going to start reducing exposure more to equities, and then see how it goes. Again, let's just see how the week goes, guys, and we'll go from there. Hey guys, thank you for tuning in. I appreciate you tuning into these videos and watching them. Hopefully you get something out of them. They're for your education. If some of you are out there that have done this before and find it boring, I'm sorry, but there's some people that actually, they're just coming into this world, and why not? Let's give them something to talk about. Let's give them I think that was a song. Anyways, let's give them something to talk about, okay, and analyze, and here we are. We've been doing it together here on the tube, and let's see where we go from here. We're in no man's land right now, guys. No support. Maybe, let me see here. Let's see, that's the problem here. It's just really, maybe there's a little support here, maybe, I don't know, but I mean, it's just very thin. We didn't spend much time building bases on the way up, and that's why now it becomes sort of an issue, because the market's going to try to find some type of value at these levels down here. I'm looking to see if we get above that 50-day moving average again. That's looking for the market to do that. We'll just have to wait and see. Again, thanks a lot, guys. Thanks for watching. Make sure you check us out on the stockmarketplan.com, and sign up on Twitter and sign up on Facebook under Stock Market Plan. Again, thanks for watching, and we'll talk to you tomorrow. Bye-bye.